Hey everyone, I'm Shaunna with Bolt Credit Services. I thank you for signing up for my class today. We're going to go ahead and get started here in a moment. I didn't know, is a claim to home warranty here today?
They're not here yet.
They'll come in the end and bring lunch.
Yeah.
So we'll give
Oh,
them
they're
a
bringing
carry.
lunch. Okay, great. Well, I also brought a friend of mine here with Dynasty Hardwood Flooring. She's monitoring the class for me today and brought some awesome duck donuts. And there's only a few people here, so where are you people that should be here and that are on Zoom instead? So let's go ahead and get started, actually. I think I need to switch to my slide. Here we go.
Oh yeah, don't forget the dogs in the back. I forgot to tell them that.
Oh, sorry, just a second. Wait, I need to start this. Wait, what did I do? I'm sorry, everybody. I'm having technical difficulties.
Apparently, duck donuts are the thing.
Duck donuts are the thing. I'm addicted to them. When I come in town, I have to go get duck donuts. Okay, so my name is Shaunna. I own Bolt Credit Services. I have been fixing credit and teaching credit education for over 20 years, and I absolutely love fixing credit. And the reason that I even got into credit originally, the first 8 years of my credit experience, I was in the banking industry. And when I was in banking, I was approving and denying loans, well, at Morgan Stanley, I was actually on their asset-based loan department, where we would give loans based on their assets. And then I moved to Discover Card, which is actually where I started studying FICO because I was dating someone who was fixing credit. I thought it was interesting. So I started studying it, figuring out all the ins and outs of the banking industry, what I could and couldn't do, and started fixing credit on my own on the side. So after I left Discover Card, my last position there was acquisitions, where I would actually close people's account due to inactivity, drop people's limits. If their credit, I would pull soft pulls, drop people's limits, all the things that happen to you and to your clients, I would be doing those things. And so after that, I went to underwrite auto loans as subprime with Prestige Financial. I could give someone 30% interest on their car. They could have 3 repos. And all those banking jobs that I was doing, not one time did they teach me about credit. So people think that if someone's in banking that they're taught credit, and nobody is taught credit. Not in banking, not in underwriting. There's no class that they teach you about credit. All they do is teach you their policy and procedures and what you can and can't do. And here's our credit report, which is usually kind of ridiculous. Like the ones that I would pull in Prestige were not like the reports that you could pull now. However, so it's important to me that people understand credit, because when you're in real estate, you guys are all in real estate, and what your clients need is income and credit. Or if you get lucky and you have all cash people, good for you. But other than that, we need credit and income. So it's really important. And so my passion is definitely helping people understand. Usually on my About Me section here, I have pictures of my family and my husband, but unfortunately he passed away recently. And so I'm adjusting my slides here, and I'll do some updates there later. So let's get right into it. The reason people have credit issues is not just because they choose to not pay their bills. Well, there are a couple people out there that choose not to pay their bills. However, it's because they went through a life event. Divorce, accidents, medical, a death in the family. And usually people do not know how to come out of that situation after you go through, because sometimes it can mess up your credit. It can take years, a couple years. Once you come out of it, the problem is people don't know how to rebuild once they come out of it. And so they get frustrated because they try to build credit and then maybe they get denied. And so a lot of people just live with no credit, or they live with cash. They're like boycott credit. And so I want to make sure that people understand that they can come out of it. Credit can always be fixed. Credit can always be rebuilt. And so I've been through my own life events. Back when the market crashed, I lost my house. I lost my first credit repair business that I had back then. I had to go live on an air mattress with my son and start my life all over again. And that is when I changed my business model for credit repair. Is I didn't want to keep people in my system forever. I wanted to help people quickly. And so because of my life event, I know how to help people and I can relate to people. And credit is embarrassing. It's important. It's an important tool to all of us. And so it's important to have someone that you can confide in and trust. And that is what we can do for you. And I'm going to teach you guys some tips and tricks today for your clients, even though I know all of your clients have 700 plus credit. But let's get into it. So FICO is the credit scoring model. That's what lenders pull. There's also Vantage scores, and those are different scores than FICO. So your FICO credit scores go from 350 to 850. And then the Vantage credit scores, which are what you and your clients are pulling as a consumer, those are Vantage scores. They're not the same as the bank pulls. Those scores are a different algorithm, and those go up to 950. So that's why those scores will vary, and I'm going to talk about that here in a second. But there are 5 components to the FICO scoring model, and I'm going to go over those. And the thing about credit is when people have scores below a certain threshold, you can't just build credit wherever you want. All banks have a score requirement, and if you don't meet that score requirement, then you're going to be denied. And so if someone has low credit scores below 620, 600, their options are going to be very limited to build credit. 90% of financial institutions will not help you build credit. You have to meet their score requirement and their DTI ratios before they'll even help you. So since you guys are dealing with mortgages, I'm sure you guys know what scores the lenders can use or what they can start with. Some of them can go down to what, 500, which that's very expensive for your clients. If you're going to do a 500, I mean, there probably should be a very good reason for that. Otherwise, try to get their scores up to this 580 or whatever it is that your lender might need. So every 20 points higher your credit score, the more loan options you have available to you. And that is in any type of financing, not just mortgage. If you're in auto, if you have a 640 to 660 credit score, you can get about a 5 to 6% interest rate. Every 20 points higher your score for auto, you get 1% better interest rate. For mortgage, every 20 points higher, you get more loan programs. You qualify for more, your rate's better. All your terms are going to be better for every 20 points higher. Yes?
Just a question. Is that including above 700 or 750? Like if it's 740 and you go up to 760, there's a difference.
So 740 plus is like the cutoff. Like if you have 740 or higher, you're going to get the same interest rate as someone with the 800. So that 740 is the key. Above that, you're golden. You're going to get the same. So if you're 800 and your scores drop to a 780, don't worry. You're still going to get the same rates. But in regards to, you know, if you have clients that are a 639, I'm sure your lender is going to try to get them with their analyzer over the 640 so that they can get the next product of loans or whatever's available to them. But you guys know that 680 and above for conventional loans, people can do conventional loans with a larger down payment. You know, if they've got scores that are 640, your lender's probably going to say they need 15 to 20% down, so they might need more of a down payment with that. But with credit, every 20 points, you get those better loan options. And your debt to income ratio, which you guys probably know, but sometimes our clients don't know. They don't understand buying a house. They don't understand financing. They don't understand credit. So they don't really understand any of these processes or debt to income ratio. You know, a lot of people think debt to income ratio is all of their debts, and they think they have to pay off all their debts to buy a house. And the debt ratios are based on the minimum payments on credit only. So if you've got credit cards, those minimum payments, 40, 50 bucks, whatever those are, it's the loan payments that really hurt you. So that's why your loan officers don't want your clients to go get a loan. For one, they'll close an account, which will hurt you. But if you go get a loan, then that payment, I mean, a $500 payment will affect your purchase power by like 100,000 bucks. So it's pretty significant, those loan payments, but we want to make sure we're educating people, because there's people out there that want to sell their house, but they've had a life event in between, so they can't buy another house because of their credit. So you have to think that credit issues aren't just for buyers who don't have a house. A lot of times there's sellers that have bought their house who knows how long, and they want to upgrade or whatever they want to do, and they think they can't because of their credit. And because they're probably looking at who knows what credit report. So a lot of people don't really understand that there are many different credit reports and scores, and they're not all the same. So there's auto scores, which the dealerships pull. Those are different than what the lender will pull. So if someone tells me that they got their credit pulled at a 580, and I say, where'd you get that pulled from? and they tell me Ken Garf pulled it, that's an auto score. And those scores are an auto algorithm, which are based on previous auto loans that they may have had. And so my auto score is in the 800s, but like my mortgage score right now is probably like a 740, 750. But some people can have a really high auto score, and then when the lender pulls their credit because they've had lates on other stuff or other things, then their score is going to be much different. So I don't really pay attention if they tell me that they got their score from an audit from a dealership. Mortgage, credit card, and like the bank scores, anything that's in banking that's pulling your credit. If you have, Home Depot, Cap One, any of those, and you have CreditWise where they give you your credit scores, those are finance scores because they're in banking. If someone tells me that Chase pulled their credit and that their score was a 640, then that's going to be pretty close to their mortgage score. But if they're telling me, oh, I got my credit score off of Credit Karma, I don't really care about that score because it's not going to be the same. So same with the auto scores. And so there are also different FICO algorithms. Right now we're on the FICO 10, but most banks pull on a FICO 8 algorithm. So it's very frustrating credit, actually. So no wonder why people get so upset about it. So this is some of the difference between credit scores, which when you're trying to, maybe you're trying to market and get some more buyers or sellers, and they think that they can't qualify to buy because they're looking at their Credit Karma, and their Credit Karma is saying that they're a 550 credit score. My Credit Karma shows me at a 564 and a 569 right now. I just checked 2 days ago. And so, but I'm in the 7s. So my scores are like 150 point difference. And so if you have a regular consumer who's looking at those scores, they believe Credit Karma scores like it is Zillow. I'm telling you, it is hard to break it's hard to break their habit of believing that those are their true actual scores, because you as a consumer or your clients that you're trying to help cannot pull a finance credit report because you don't lend money. Only banks and financial institutions can pull a FICO finance score. So when you're talking to people, yes.
So I'm thinking I'm like talking to someone, what's a short way of explaining like don't trust Credit Karma? What's a good way to say, this is why, because I'm like, oh, they'll like what you just said, insistent Credit Karma. Mm-hmm. How do you debunk that to them?
I would let them know that Credit Karma are consumer scores. They're a different algorithm. They're called a Vantage score. If you log into Credit Karma, it will say Vantage score. Mm-hmm. And the FICO score is the one that you want. That's the one that matters for the lenders. So if they are talking about Credit Karma, I would say, well, those scores, lenders do not use those scores. They use FICO scores. Credit Karma is a Vantage score. And so you definitely want to get them to a lender, because the lender is going to know if they're going to be able to move forward. And actually, usually their credit's better when the lender pulls it. So if their scores are lower on Credit Karma, they're usually higher on the lender report. If they're higher on Credit Karma, they're lower on the lender report. So those that are like, hey, my scores are 770, it's wonderful, please show me houses today, I have no problem. And then the lender pulls credit and they're, a 564 like me. So it's just crazy. So if you want to pull a credit report that's somewhat accurate and not have a lender pull it, you have to pay for it. For one, you're never going to get accurate information for free. They're definitely not going to give you any information that's accurate for free. But at myfico.com, you can pay, I don't even know what it is now. I thought it was $69 for a tri-merge report on there, but it does show you all your credit reports and scores on there, your mortgage score, all of that. And we test all these sites because we try to see how close any of these consumer sites are to an actual mortgage credit report. And really none of them are, except MyFICO and the Experian app that you pay $10 a month for. If you were to go to your bank, the credit union or something, get your credit pulled, and ask them what was my score, and they say 679, and you look at your Experian app and it says 679 FICO 8. Usually most banks pull a FICO 8 and they only pull from Experian. So when you go to the bank or any place, they usually don't pull from all three credit bureaus. Either it's one inquiry, usually on one bureau.
And every time you pull, is it lower your credit score?
No. That's a myth. And I'm going to go over that actually regarding inquiries. So My FICO is a good place, or the Experian app. But if you have someone, if you're trying to get some clients moving forward to a lender and they tell you, oh, I want to buy, but this is holding me back, or I'm going to wait. What's the reason they're waiting? Usually it's because of maybe their income, maybe their self-employment, or their credit. So if they say, well, I have to pay some stuff, what stuff do you have to pay? Because people affiliate paying stuff with helping them. If I pay this, this is going to help me. But that's not how credit works. And we don't want our clients to go pay a bunch of stuff that's going to drop their credit score. And now they're like, what the heck? I was just trying to do what I thought would help, and it's not the case. So we want to be an advocate for them to help them get prepared to buy, because, you know, of course we want all of our clients to be approved the minute they get to the lender. But a lot of times it's like, hey, let's do these couple of things and get you prepared to buy, you know, in a few weeks or whenever that is.
Can I ask you a really weird question?
Yeah.
Why when you pay something does that lower your score? Like I just heard that from somebody I was talking to about, I just paid off, not paid off, but she's like, I just made this huge payment on a credit card and now my score is lower than it was before.
Well, paying credit cards doesn't drop your score. It's paying off loans or paying negative items like collections. So if people pay off their loan, that's wonderful. The debt is gone. However, you just lost an open line of credit. And so I'm passing this understanding credit report. So I'm getting to how credit is calculated, which I'm going to talk about the closing of the accounts, because that's the most damaging thing people can do. Even though everybody wants to pay off their loans, if they're able to, I want to pay this loan off, which is wonderful. However, loans are a term loan. You cannot extend them. You can't do anything other than refinance it or pay it off. Once it pays off, it closes. And closing an account is the most damaging thing you can do to credit, actually. It affects, credit's based on open lines of credit. So the longer they're open, the higher your credit score. The shorter of that credit history, the lower your credit score is going to be. If you close all your long-term accounts, like student loans really give people longevity on their credit. And then when they close them and they had 10 of them, and now they just have 2 credit cards that have been open for a year or 2, now their credit score is going to be significantly changed because they lost all their long-term trade lines. And that's what's important is the length of credit history.
What about like home equity line of credits?
Home equity is like a revolving line. That's like a credit card.
Okay, so that's good for them to have. It's just the minimum payment for that is what's going to count.
Yes, and then if their home equity line is maxed out at $100,000 and they've used 99,000 of it, that's affecting them just like any other credit card. So in credit card balances are 30% of your score. So 35% of your score is your payment history. And that's your good payments, of course, and the negative stuff. So if people have collections, lates, anything that's negative, a charge-off, anything that's a charge-off is affecting you 35% of your score. So the more recent it is, the more damaging it is. The older it is, the less affected it has. Nothing's permanently damaging to credit. If you had lates 4 years ago, who cares, to be honest with you? If you have open lines of credit, it doesn't matter if those lates and such are old. We have people contact us that have old paid charge-offs from 5 or 6 years ago that they want off. And it's like, I want them off too, but if we dispute them and they don't come off, they'll do a new update for 2024 and your scores will drop. And they're not even hurting you, so it doesn't really matter. What matters is what's going on your credit right now. How long have your accounts been open? How are you paying them? What are your balances? So keep that in mind. Credit, you want at least 3 open lines of credit all the time. With 3 open lines of credit, you can have a 700 credit score or higher, provided that you have had them open for, over 6 months to a year and they're not maxed and such. So 30% of your credit score is your balances on your accounts. The higher the balance, the lower the score, lower the balance, the higher the score. You do not have to be in debt to have good credit. Some people can't stand credit because they affiliate it with debt. You do not have to be in debt. You don't have to have loans. Loans, those will put you in debt until they're paid off, then they'll close. But credit cards, you don't have to use them every month either. That's a myth. I don't know who came up with that. However, you just want to use the cards once or twice a year to keep them active because payment is an activity. So when I worked in banking, after about a year, of inactivity, we could go through and randomly close accounts if we wanted to. We could cut their limits down because we wanted those accounts to be used. But you could keep them at zero, use them once or twice a year for even $20 because it doesn't matter the amount either. It's the payment that keeps it active. So stay out of debt. Lower your limits down if you have a shopping problem. If your limits are $10,000, lower it to $400, and then you won't get in trouble. I have a shopping problem, so I know this firsthand. So if you have no credit score, it takes 6 months to get a credit score if you open up a brand new line of credit. It takes 6 months for a brand new line of credit to even benefit you. So when people say, oh, I opened up a couple lines of credit, that's going to help. That's not going to give you a huge increase immediately. It's not going to give you a score, and it won't increase your score quickly. It'll increase your score over 6 months, and it will take 6 months to get a credit score. The only way someone can get a credit score sooner than 6 months is being added as an authorized user to an existing credit card. Existing credit that has history on it. So if the account's been open 5 years, you get added to it or you add your kid to it. They don't need to use the card. You don't need to give them one. But if you piggyback them on Cap One, Discover, Amex, those ones report to all 3 bureaus, they'll have a score in 1 to 3 weeks. And if the account's been open a long time, they'll have a 700 plus credit score. Even if it's got a high balance, I added my son to a maxed out Cap One that was 5 years old, and it gave him a 678 credit score. And then I had him go build his own credit. So when he had the good credit score. So that's how you can help your kids. And also if someone, like if you guys have clients, let's say the husband and wife, one of them is a 750 credit score and the other one is just under 740, and we need to get her scores above a 740 so they can both get that 740 plus loan option. But there's no negative stuff. All their balances are paid off. You can get an increase by piggybacking on someone's credit card as well. So that person can piggyback on the husband's card and get a 20 to 30 point increase in 1 to 3 weeks. Nothing's immediate with credit. It takes 1 to 3 weeks from the date the creditor updates for it to show on your credit report. So if someone pays it today, that doesn't matter. And also the other thing about if you pay your balances in full, people say, oh, I pay my balances in full every month. I always have a zero balance. Well, usually that means you're always showing a balance on credit because you pay it once a month, but you use it every other day of the month. So if you paid it on the 15th, but they don't update till the 28th, whatever your balance is the day they report to the bureaus is what your credit is going to reflect. So if you always want to have a zero balance on credit, you need to call the creditor, find out what day they report to the bureaus, and pay it off the day before that. And then you can use it all you want, and you'll always have a low balance on credit. But usually people who pay their balances off in full, they have a maxed out card every time credit is pulled. And they're like, but I pay my balance off in full. And it's just because the dates are different. Their cycle date and your due date is not the same date. Just because your due date is this date does not mean they're updating to the bureaus that day. So 15% of your credit score is your length of credit history. However, that's actually the most important because if you close an account, it affects you in types of credit, length of credit history, stops any utilization and any further payment history. So it's very damaging. It's not permanently damaging though, just like nothing's permanently damaging on credit. Your scores do start to go back up over 6 months after you close an account. And it's not like you can't close accounts. People are like, oh, so I can't do this and I can't close this. And that's not the case. If you know you need to refinance your house in 3 months, don't go close an account. It's like you just have to time it right, really. It's timing. And so if your lender needs your clients because their DTI ratios are too high and they need to get rid of a car or whatever they need to do, they need to do that closer to closing. If they're not going to close or buy a house for a few months, don't have them go pay off their loans and stuff that the lender needed them to do right now because the loan will close, their credit score will drop up to 50 points, and then the lender will need to repull credit every 90 to 120 days. So if they have to repull credit and they've closed accounts during that time frame, they're not going to qualify or they're going to qualify for a different program that's going to be much worse than what it was before.
So tell them to keep everything as is until after the loan closes.
Yes.
Also not to go and purchase like a new car or
Right. I have people, if you want to get a new car and trade it in, do it 3 days after you close on your house. Don't do it at the beginning. I don't know why people go buy cars. I don't know. I did that. Was buying a car before I closed. Like I was signing docs and I'm all, oh, I haven't closed on my house yet. I need to hold everything, stop. I don't know what it is about buying a house and getting a new car. It feels good.
They go together.
Yeah, they do go together.
Well,
Yeah. And sometimes if I have my car in my personal name and not my business name, I always have to move my car because I like race cars. So my payments are very high. So when I buy houses, sometimes my DTI is too high because I write everything off and I have to move my car into my brother's name until after I close on my house, and then I move it back. And he always does it, and he can always get approved because he's got an 800 credit score. So when I do that, even I do it when I'm out looking for houses about to go under contract. That's when I make the changes to the loans. And then you just show the lender that it's paid off or give them the information they need, and it doesn't need to show up on credit. So, or your clients can pay loans down. If they have money and they want to pay a loan off, have them pay it down to where they have 9 months left on the loan or less, and the lender will not use that payment towards DTI ratios. And their scores will go up because they paid the loan down, but it's still open. It's paying a loan off, it automatically will close it. There's nothing you can do. Yes.
Okay, so this might be dumb, but okay, so when I'm working with lenders, like these mortgage brokers, like they know that stuff, but did they know it to the level you know it? Because then they'll say something like, oh, I need you to use this department, like, restore the credit, so it kind of makes me wonder that, like, the average lender guy that you're working with for the mortgages, do they really know the level of debt?
No, well, they kind of know what their analyzer is saying, and they know a lot of them, some of them know more than others, but
Yeah.
They know more than like if you were to go into your bank branch and stuff like that, of course. So if you do have a card, and that's right, if they say go use this card, because if people have department store cards that they haven't used for a couple years and they're still open, they're inactive on credit, so they're not helping you. However, if you go use it even for $20, it will make it active and actually increase your scores a little bit. And so they do know, but sometimes not to the depth of, like, sometimes they'll say, oh, your debt to income ratio is too much. You need to pay this off. And people will go do it right then, even though they're not actually even ready to buy yet. And then it will affect them because they weren't thinking of the long-term later outcome of what paying off all those loans are going to do. Besides help the DTI, it also affects the credit. So it's helping DTI, it's affecting credit. So it's like you got to work together there to make sure that we're not, you don't want to lose a client because of something like that. So what I tell clients is when they're in the process or if they want to buy, do not close any accounts. Don't use your credit cards. I tell them not even to use their credit cards at all. And don't get any new lates or collections. And if they want to do something or need to do something or something happens to their car, usually I'll say, you need to call me first and we'll talk to the lender and see what options we have. Because sometimes if they do need to get a loan or something, and that payment will be okay in their ratios, then they're going to be okay. But we want to make sure we find out first. So inquiries is what people worry about the most. That's what your clients, they freak out about inquiries the most. They think inquiries drop your scores 30 points. And inquiries are 10% of your score. They are the least of your worries, okay? You can have some inquiries before they even affect you negatively. You can have about 2 to 3 inquiries per bureau per year before they even affect you 1 to 2 points apiece. So in most places, don't even pull your credit on each bureau. So like if you go to the bank, let's say you go to Mountain America and America First, get your credit pulled. That's 2 inquiries on Experian only, not on the other bureaus. So if you're only getting your credit pulled a few times a year, you have nothing to worry about. Usually the only time people have issues with inquiries is if they're car shopping. Because the used car dealerships, they have the most bank affiliates. All the used car dealerships, they probably have like 40 bank affiliates. So if you go to them, they pull your credit and then all their bank affiliates pull it. And that's where you get all the inquiries. If you go to like a Acura or Lexus dealership, they have some, but they probably only have like 7 or 8. So depending on where you're going, if you want to get a car, go to the bank, get pre-approved, and then go find the car. because the dealerships will definitely pull your credit. And I know because I used to want, when I underwrote auto loans, I'd have 1 minute to determine risk, interest rate, payment, and get it back to that dealership as quick as possible because I wanted to be the first bank that got back to that sales guy that went up to the customer and said, hey, here's what your rate would be, here's what your payment would be, and then all the other stuff that comes through after. We have this available and this available. It's all the other banks that got back to them. So it's not them back there working any magic. They're just dinking around waiting for the next bank to, send them a horrible rate. Yes.
So what if you lease your car and so they're re-scanning your credit every 3 years? Is that a problem?
Well, lease is pretty much like a loan. It shows on your credit just like a loan. It's a term, so it's open. And then when you pay, once you get a new lease or whatever you're doing, it will close it and drop scores. So even though it's a lease, it still shows on credit as a loan, like an installment loan. So inquiries are okay. Some people will ask me, well, what if they're house shopping and they get some inquiries within a month? If they get inquiries within a month, that's wonderful. However, if it's all coded the same, because credit is coding, everything is a code. So if that bank is coded as mortgage specific, then they'll count as one within a 30-day time frame. But if someone goes to, like, let's say Citywide Home Loans, First Colony Mortgage, and then Chase Bank, Mountain America, America First. Chase Bank and them aren't mortgage specific unless you went specifically to, Chase. Do they have a home mortgage department? I know Wells Fargo has a home mortgage and they're coded as such. But if you're going to different banks, they're not coded the same. So all those inquiries are going to be different. And then types of credit is 10%. So you want a variety of credit. If you don't have a variety of credit, that's fine with me. I just like people to have 3 lines of credit. If there are 3 credit cards that you use once a year and you keep them open a long time, you're going to have very good credit scores for whenever you need whatever you want later on in life. So it doesn't matter to me the types of credit, but if you have a variety, auto loans, department store cards, student loans, credit cards, that does help you to have a mix. So you want open lines of credit, open for long periods of time with low balances and good payment history to have a good credit score. The only things that drop your credit score, the only things, if your clients say, oh man, my score's dropped 40 points, I don't know why. Closing an account, maxing out a card, getting a new negative item. And sometimes people just focus on the score and it's like you have to go look and see what's on your credit. What changed? Did a balance go up? Did you forget that you refinanced a car loan? Because sometimes people think, oh, I closed this one, but I got a new one. So it took its place. But the new one has no history, so the new one does not help you. And now the old one that closed hurt you. So you just have to kind of understand so we can help our clients along the way not make silly mistakes like they do.
Send them to you.
Yes. So knowledge is power. There are so many different types of options out there that people don't know about. For one, there is a medical hardship option if people have medical bills and we're helping them. If they have a lot of medical bills or consistently are going to the doctor, we don't have them pay their bills until they go apply for hardship. So all hospitals, billing department, all hospitals under the Fair Debt Collection Practices Act, they have to have some sort of hardship option. Credit card companies have it. I used to do hardship re-age programs for people all the time that fix your whole account. It's called a re-age program. You have to ask for it. They do not offer it out of the kindness of their heart. So if you call and you're past due, even on your medical bills or credit card, they're going to want that whole payment. But if you ask them for hardship, financial assistance, whatever they call it, they'll say, oh, sure, here's this, fill this out for medical. It takes a couple weeks, but if you get approved for 100% adjustment, they'll adjust all your bills. They'll even backdate it. Like sometimes people have medical bills in collection a couple years, and they'll adjust those because of this hardship. And it lasts for a year. So if you qualify for the hardship, it will last a year. I know I qualified for hardship recently because my husband's been battling cancer for 2 years. And we qualified for hardship, thank God, because he was in the hospital for months and months and months, and I don't know what I would have done. So I thank God for medical hardship. Doesn't matter what it is income-based, but it can't hurt till you try. I mean, you'll be shocked sometimes that you would get approved. So, and medical bills are considered family debt in the state of Utah. And in 9 states or community property states, we are not community property here in Utah. However, medical bills are. So what that means is if you are married and you guys have kids and the kids go to the doctor and the wife signs that she's responsible for it and, goes to collection, doesn't get paid, they will put the collection on the dad too. So they'll put it on both, even though the dad didn't sign. Same with the husband and wife. If the wife's going to the doctor and has collections, it can go on the husband's credit as well. So, but they did change the laws regarding medical bills last year and the beginning of this year. So any medical bills under $500 shouldn't show on credit any longer. If you pay a medical collection, it should come off of credit immediately. And it should take about a year for medical collections to show up on credit. They can't just immediately post it. And veterans, if there's any veterans, they shouldn't have any medical bills on their credit at all. So if you know anybody with any of those issues, you let us know. Okay, so a lot of people also don't know that there are many different reports that are pulled. So when you get your credit pulled, even at the bank or at your mortgage lender, they're not just pulling credit. They're pulling other reports. Okay, so banks pull what's called a check system report, which shows if they've ever had any accounts go into the negative and charge off with banks nationwide. So if you move from another state and you had check systems issues with banks, they're gonna find it. And once you're in check systems, you're in it for 5 years. Check systems can be disputed. We dispute them often. And we could actually see on credit, we could tell if they're in a check system by, let's say if they had America First Credit Union overdraft and it's charged off, that means they're in a check system. So if your checking or savings, anything attached to those accounts went negative and charged off, which a charge off is you stop paying an account for up to 6 months, then it charges off and the whole loan comes due, like the due on clause that we all know and love. So another report that they'll pull is a LexisNexis report. So anybody in banking, commercial lending, mortgage lending, regular banking, they're going to pull a LexisNexis report because judgments and tax liens do not show on credit anymore since 2017. So the only way they can find public record information is by pulling a public record report. So they'll pull credit, check systems at the bank, and a LexisNexis. And mortgage lenders will pull credit, LexisNexis. They'll pull a foreclosure report, which is called a MERS report, and they will find foreclosures. If someone had one a long time ago and they put no foreclosure on their application, they will find it. And they will also pull on my next slide is actually the federal debt report for student loans. So there are many reports that are pulled that can affect your client's deal. And student loans is actually on this slide, but I didn't talk about the CAVERS report. However, if someone has student loans or any type of federal debt, sometimes they'll go into collection for a while, for a long time if they don't pay them, and then they'll fall off of credit. Because on credit, items will, once they're on there for 7 to 7.5 years. They don't automatically come off ever. They don't come off if you pay it. They stay on. And so if someone had student loans and collections and they fell off of credit and they're thinking, oh, my debt's there, not on credit, so they don't exist, that's not true. There is a federal report called a CAVERS report, and your lender during the process of being under contract will pull one of those. And I've had deals get lost because of that. It pulled up, CAVERS report, and then you have to get it fixed before you can move forward. And then it's a whole process to get the CAVERS report updated. We help try to dispute those reports as well. But student loans are tricky. If you have kids or you have student loans and their loans are in deferment, student loans are the hardest lates to fix. They're harder than a mortgage late. Okay, so try to avoid any student loan lates if at all possible, especially because they're so easy to work with. I mean, they have so many programs and student loan forgiveness options out there right now that it's silly to be past due or to just, not get set up on some sort of forbearance where there's no payment due. So if you have student loans, usually people have multiple loans because you have a loan on your credit for each disbursement that you've received. So let's say you have 5 student loans on your credit report and the loans are deferred until April 20th, 2024. You missed that first payment. You get 90+ day lates on all of your loans for the whole time they were deferred. So it's not a 30, a 60, a 90 day late like normal. It's immediate 90+ day late. And they are impossible to fix almost. I just want to cry when we see people with all these lates and I'm like, oh my gosh. But they do have options to help you and get current and whatnot. But if you can avoid being late and just refill out the paperwork. If you don't have the money to make the payment, refill out your forbearance or deferment a month or two prior. And there's so many 0 payment a month options for student loans that you should definitely not have to go past due on them. We're going through this pretty quick with nobody having questions today. So also, I was just talking about judgments and tax liens. They do not show on credit anymore because the court system is the worst system that has the most inaccurate information. They'll just put in wrong date of birth and stuff. They won't fix it either. And if you want them to fix something, you can't. They won't. You have to hire an attorney. And they put it in wrong. So the only public record that shows on your credit is for bankruptcies, because the bankruptcy courts require exact. Everything has to be exact. So those will show on credit still, but judgments and liens do not. And if the lender isn't pulling a LexisNexis and approves your client because they've got 740 credit scores, your client goes under contract, and then title pulls a public record report, that PR report, and there's a $17,000 tax lien that you didn't know about, and your client has to pay it to move forward, and they don't have a payment arrangement on it. So now you had no idea. So if the lender isn't pulling another report, then sometimes these things get hidden, and that's the only downfall of not having judgments and liens on credit, is if they're trying to buy a house or do anything that will check a public record report. Bankruptcies, Chapter 7, Chapter 11, Chapter 13. The 13 is the wage earner, where you make too much money. You don't qualify for a 7. You make enough to pay back your debts at a settled price through the bankruptcy trustee, and you make them a payment for 3 to 5 years called the wage earner plan, and they settle your debts one at a time. The Chapter 7 is where all of your debts are, wiped out, except student loans, and some taxes you can actually bankrupt if they're older than 3 years and have been filed. But the 7 is, you can basically, everything will zero out. You can rebuild. You can always rebuild in any type of bankruptcy that you're in. It is not the end of the world. Some people will say, oh, I don't want to do bankruptcy. It's going to destroy my credit. And it's like, your credit's already destroyed. So not deciding what you're going to do, either settling your debts or if you're, not that you should file, but there are options to help better your credit, that you're not waiting 7 years for it to fall off, because that's how long it will take. But the bankruptcy itself, if you get a 7 or 13, it's not the bankruptcy that kills your credit, because some people say, oh, bankruptcy destroys you forever. No, that's not the case. You cannot get a house for a couple years, 2 years, but you can rebuild other credit. And you have to get out of those habits that you had. So if you had to file bankruptcy, make sure that you are, not making those same mistakes, or maybe life event happened. I mean, I went through my life event. I had to file bankruptcy back in 2007, and it changed my whole life. And I have, I make sure I'm not doing that again, and I'm not doing these things again. I mean, if you're learning from it and moving forward, it's not there to take advantage of, but some people do. It isn't your fault.
We have a partner that takes off a
Yes.
grand or something like that, and we do high and dry.
Yep.
Sometimes you just have to.
And sometimes that happens, and it's not the end of the world. I mean, if you're able to pay your debts back and you could settle, if people can avoid a Chapter 13, then I would, because you're basically paying your creditors back, so you could do it yourself and avoid a Chapter 13, actually. If someone, people will ask us, hey, I don't know if I should file a bankruptcy. And if we do sometimes recommend, we'll just have them talk to an attorney, because we're not an attorney. But sometimes they don't have to. Their debts are too old, or maybe they only have people want to file bankruptcy over small amounts of debt. Sometimes only 15,000 and stuff. And it's don't do that. Just settle them one at a time for 20% if you can. Because they might not settle for 20%, but that's where you start. So you can meet in the 30 to 40% range. And if you don't have the money to settle, they don't need to know that. They don't need to know what money you have. Calling creditors to try to settle debts does not restart anything. It doesn't restart a statute of limitation on anything unless you make a payment. Making a payment will restart that. But calling them to settle, you have to try a couple times, but they'll probably settle for 30 or 40%. And then if you don't have that 30 to 40%, once you come to the negotiation, let's say you settled for $800 on, a $2,500 credit card bill. and you don't have the 800 right now, you could say, okay, I'll pay $200 today and split the rest. You never, ever make payments on the whole balance of a negative charge-off account. Settle it, then split it into payments. If you just make $50 a month payment on a Capital One $3,000 a month charge-off, you will never, ever pay that debt off. Because even on a good credit card at the $2,000, let's say you have a good credit card with a $2,000 balance and you only make the minimum payment, it will take you 13 years to pay it off. So if you have a charge-off account that's way over what the limit was because it's all interest and everything, and you pay $50 a month, that $50 a month is keeping that account updating every month. Charge-off, charge-off, charge-off. You're keeping your credit low because you're trying to do the right thing and pay something. But paying it that way when it's a negative account negatively affects you. Any updates that a negative account does negatively affects you, and that includes a payment. Just because it's a payment doesn't mean it's helping you, unless it's a good open line of credit. So you want to zero out a negative account as quick as possible. Don't let it sit there while you make payments. Try to settle it down, split that into payments. Don't be scared of creditors. They're 18-year-old kids that are reading a script. They can settle, they can do certain things, you just have to ask for it. And the problem is most people don't ask for it, they just take it because of whatever. But just because you settle doesn't mean you're not paying your debts. They've added so much interest on it. Usually your debt is quadruple what you really actually charged on there. So tax liens, if you ever get a tax lien, ask for a withdrawal. And that a withdrawal means it can be vacated from the public record. If you just get a release of a lien, that's proof of payment. That doesn't vacate anything. That just updates it paid, which you don't want it in there. You want it removed. So we can remove stuff in LexNex. LexisNexis report, they're the ones, the courts report to them, everybody reports to LexisNexis. And LexisNexis shares all your information and makes so much money off of everybody. They're the worst. They're bigger than the bureaus, just so you guys know.
And the tax liens, is that for like the state and federal?
Yes. Mm-hmm. And okay, so this is huge. The statute of limitation on the collection of debt. People confuse the credit statute and debt statute as being the same thing. Credit and debt are two separate things. Credit reporting is different than the debt statute. So just because something's on credit doesn't mean that you owe it. It could be past the statute of limitation on debt. And just because something's not on credit doesn't mean that you don't owe it because the debt is still out there. Okay, so the statute of limitation on the collection of debt is based on the state you lived in when you opened and incurred that debt. And it starts when you go past due. So once you stop making a payment on something, the statute on that debt collection starts, which is how long the creditor has to sue you. So there's a statute on anything. Even if you get in a car accident, you have 3 years to sue on personal injury. You can't sue 10 years from now for an accident you got in 10 years ago. That's the same with credit. The statute is there to protect consumers from creditors trying to collect for 20 years from now, like Gold's Gym does.
Can I ask a question about that? What about someone coming after you for something like a family member owes? We keep getting like mail for a family member, like we're not even on this. So I don't know, is that possible?
Well,
Like,
sometimes
are they
if you
looking for anything?
sometimes if you get something for a family member or you're getting calls for a family member, it's because they put you down on an application as a reference. And collection companies will skip trace. So they'll skip trace and find family members and addresses and they'll start sending you stuff. But you can respond to those and say, not at this address, this isn't mine, and they'll stop. Cease correspondence. Unless you're on it, then.
Not knowing.
Okay.
I would get calls for my ex-husband's ex-wife.
They'll skip trace. They're so annoying.
Yeah, like
Trying to get information. Do you know where I could reach them? Can you get them a message? Sure, I'll be right on that.
Yeah.
So in Utah, the statute of limitation is 4 or 6 years. So oral agreements and open-ended. So open-ended is like a credit card, a revolving line of credit. However, those are tricky because if you sign a certain contract and promissory note on the application that you filled out, it technically could be a written or promissory note. So a lot of times if people have credit cards, We can statute them after 4 years and hope that they don't have the written contract agreement that would change it to a different type of statute. However, once you go past due, the statute starts. So once 4 or 6 years passes, if you have not made a payment and they have not filed a lawsuit, you legally do not ever have to pay the debt. So the only thing that restarts the statute is the consumer making a payment. So even if they call you on a 10-year-old debt, some collection company, if you make a $10 payment, you just restarted the statute of limitation. And who cares if that company bought it? The statute is not based on them reselling it. It's based on the consumer payment. So even if 10 collection companies have bought the debt, that does not restart it when they sell the debt. And so most people don't know that, or sometimes people will ignore a summons because they're like, oh, that debt's 10 years old. It's past the statute. The court doesn't know it's past the statute. It is up to you to defend yourself. That's why if you get a summons, you have a 20-day time frame to respond and plead your case. So if someone gets served on a debt that's past the statute, I prefer that they just send us a copy and then we could tell them what to do, or if they were with us, we can respond to it. Never ignore a summons. If someone gets sued for a debt that's within the statute, they need to settle it if it is theirs. We have them settle it, respond to the summons to stop a judgment from going through. You do not want a judgment to pass because that changes the statute. If you ignore a summons, you get a default judgment. And after 30 days, if you don't appeal it, it's an 8 to 10 year statute now. And now they can request a writ to garnishment your wages and your bank account. Until there's a judgment, you cannot request a writ to garnishment. If some of you are investors and have properties and stuff that you're going after tenants and you get judgments, if you get a judgment, you can request a writ to garnishment of wages and bank account, FYI, through the court. Just the process of them getting served and stuff, probably a couple months, because, the writ to garnishment, actually, if the court approves it, then they just serve the employer and it starts, the tenant has they can't, it's hard for them to stop that. But regarding those summons, if you ignore any summons, it will go to a, default judgment. So if someone calls us, like we just had someone call a couple weeks ago who they started getting garnished and they never got served, they said, which sucks, but the judgment was entered a few years ago. And so it's not like you can really appeal that, but you can try. And so, they were like, well, the debt was old. And it's like, once it goes to the court and that stuff is approved, like I can help you with credit and teach you how to do stuff, but I can't make those changes in the court. So don't ignore any summons. Don't be scared of it either, because there are things that they'll do you just don't want that judgment to go through. And if someone files a lawsuit within the statute, that stops that statute of limitation. It's after that time frame that you don't have to pay it, but within that time frame, if there is a lawsuit filed, then that statute is stopped.
So, okay, so sorry. So the statute of limitations on debt collection, let's say 6 years has gone by, you never paid it, the debt's still out there, and now they can't come after you for it?
Well, they might try to, but under the law, you're not required to pay it. So it's past their time frame for them to sue you for it and legally collect on the debt.
Oh, I see.
But they might still try to. So because they bank on the fact that you don't know about the statute. But if you bring it up, if you tell them it's past the statute, they'll stop. If someone gets a collection notice for a debt that's past the statute of limitation, if you respond to that it's past the statute of limitation, they'll stop.
Right, and they certainly can't report you then, but all along they've been
They'll report you if you ignore the notice. So let's say they sell the debt to some collection company and it's old debt. And let's say Express Recovery Collection sends you a notice and you ignore it. Express Recovery will show up on your credit the next month. So under the law, anybody who's been sent to collection, the collection company has to send you what's called a 30-day right to dispute notice. Has to give you the right to defend yourself, dispute it, pay it. If you don't respond to that, then the next month it will show up on your credit report. And there's a paragraph on the collection notices. That's how you know it's your first notice. Unless you notify us within 30 days that this debt is valid. So they're basically telling you have 30 days, but people will ignore it often. But that's where you could stop it from showing up. is not ignoring it.
So how do you respond to that?
So if it's past the statute, you can call them. Well, I would respond via writing and calling them if it's, and say this debt's past the statute of limitation, you need to cease collection.
No.
Yep, you got to cease that. And credit statute is different. So once something shows up on credit, it's on there for 7 to 7.5 years from the date of last activity. And the date of last activity is the last date of your payment. That date is one of the most important dates on a credit report. There's 3 dates: the date they opened the account, the date they last reported to the bureaus, and the date of last activity. Last activity is what will, if you pay an old collection and that date updates, it will significantly drop your credit score. If you go, like it's tax time, people think, oh, I'm gonna go pay off this stuff. I wanna buy a house, I'm gonna go pay this. They'll go pay 5 $40 medical bills from like 4 years ago, thinking that's gonna help them, and it does not. Now, well, medical bills should come off when they're paid now. So those type are not a good example right now, but maybe Verizon, maybe they've got a couple collections. They got their money, they're trying to pay it. They're doing the right thing, but it just makes them brand new. It doesn't make them come off. And people think if I pay it, it will just come off and clean my credit, and that's not the case. So we just want to make sure that our clients know what the heck they're doing and the difference between the
So
two.
you're saying, so if there's a debt that's on your credit, even if you pay it, it'll stay on there, but it'll just show like a zero balance?
It'll show 0, and then it will update date of last activity date, and it will stay on there for 7 to 7.5 years from that date.
Okay.
So the day you pay it off, it's so weird, it's hurting you.
If it's negative only. But you'd think paying it would help you, but if it's a negative account, it's coded negatively, so if it updates, it will negatively affect you.
Dang.
Credit
So what's the
isn't-
best way to do that? Let's say you
Have
have
us help you, and when you pay it at the same time, if we need you to, then usually when we do disputes and have people do certain things at the same time, it will all reflect and come off within 30 days. So there's a process to it. So let's move forward. I think we're going to be in business credit now. So we are, I can't believe it's 11 only.
Yeah. No questions.
I do have questions on that. It's so weird because I have 2 medical.
Are you doing online? Yeah.
So,
Or Presidio on the?
I think it's like a too private of a question.
Like code words.
I
But
can
it-
talk to you after.
Okay.
Yeah, she does the code words, yeah. You did the code words, right?
I didn't know I was doing code words today, but I can right now.
Oh,
Usually I do 3 code words.
Yeah.
So mortgage will be one of them.
are we supposed to do something?
No, you're on my roster.
Oh, yeah.
You guys signed the roster, right?
There's a roster on the back.
That's right.
Do I
Okay.
type anything on here for them?
You could,
No.
Okay.
So the people that are on Zoom, usually at the end of the class, they will email me the code words so I know that they stayed through the class, and I'll bank their hours. So sorry about that. All right, so business credit. Let's get going on this, and we'll end a little bit early probably, but we'll still give you credit. Don't tell on me for ending early. So business credit, if you have a business, you should automatically start building some business credit, even if you don't really need it, just so it's there in case you need it. Because sometimes doesn't an amazing opportunity come up sometimes and you're like, I wish I had this, or I wish this, and business credit is amazing. If you have a business, you should let your business finance your business and your personal finance your personal. Don't let your fund your whole business on personal and you're tapped out and now you don't know what to do. And especially because business credit and obtaining those lines of credit, you can get up to 10 times more funding and financing under your business than you ever could personal. And the amazing thing about business credit is they don't care if you write everything off. Commercial lending is different than personal lending. Our personal lending, they don't want us to show $20,000 a year. Then we can't qualify for anything. Then we have to adjust our taxes, or we have to do certain types of loans, and it's so frustrating sometimes. But business credit is not. That's why the rich put everything in their business or trusts and whatnot, and then keep their personal credit separate. So that is actually the goal. When it comes to business credit, there are 2 different types of trade lines, basically. The financial trade lines that you can get from banks and lines of credit, equipment lending, things like that. And then there's vendor trade lines, which some of you guys that might be flipping properties and stuff and have side businesses might have accounts and vendors set up. Like you guys, you do flooring, you could set up accounts with your vendors and they'll report to business credit. And those accounts are nice because, I mean, even if you don't really use them, and that's the good thing about business credit too, you don't have to be in debt to have business credit either. You just need some open lines of credit and pay them early. So I'm going to go over a couple different credit reports and scores. So just like personal credit, business credit has many different credit reports and scores that the banks are pulling. So all the major banks worldwide are pulling and reporting to Dun & Bradstreet. Dun & Bradstreet is credit bureau for business, and they are worldwide. They are humongous, okay? So anytime I open a business, and I have a few, the minute I get my EIN from irs.gov, which is the first thing you do when you start your business, it's free, irs.gov, get your EIN, then go over to dnb.com. Will you put www.dnb.com in there for Dun & Bradstreet? Go to dnb.com, hover over, get Dun's number, because Dun & Bradstreet, their credit score is called Paydex score. It goes from 0 to 100. 80 to 100 is good business credit. That's like having a 700 plus in personal. And your Paydex score, so to show a Paydex score, if you go to Chase, let's say you bank with Chase or any of those big banks, they're going to pull a Paydex score. If you have lines of credit right now currently in your business, but you do not have a DUNS number, then you do not have a Paydex score. It's like the DUNS number connects your EIN. It's like, because your EIN is your business social. Your DUNS number is going to attach that, and that's the missing component. If you have business lines of credit and you're like, why the heck am I not showing a credit score? It's because you don't have your DUNS number. The DUNS number is free. It takes 5 minutes, dnb.com. Go get your DUNS number. And then just that, if you do any business lending with your business and put your EIN on an application, it's automatically going to report to DUNS. So there's nothing else you have to do once you get your DUNS number besides set up your profile on Dun & Bradstreet. They try to sell you a bunch of stuff and say that you need all this stuff, but you don't. Just set up your business profile, open up 2 to 3 lines of credit, and pay early. Because as you can see, Dun & Bradstreet scores are based on prompt payments only, not like personal credit, not what is your balance today, all this personal credit stuff. It's only based on how you pay. Pay early, you have a very high business credit score. Pay on time and you're late. So make your payments 1 to 2 weeks early. You don't have to pay it off either. It can be your minimum payment. So it's not like on business credit you have to pay all your debts off every month. That's not the case. If you open up a couple lines of credit, you want to use them once, kind of like with personal credit too. If you open something up, you want to use it once, even if it's for 20 to 40 bucks, pay it, and it could sit at 0 for a year if you want. But that payment is activity. Once you open up a couple lines of credit, use them, within 90 days, you'll have a Paydex score. That's how long it takes if you had no lines of credit and you got your DUNS and you started building trade lines. If your business has been in business less than 2 years, your options to build some lines of credit are going to be kind of limited. Like you can't say, oh, I want to get a $100,000 line of credit for my business and I just started it 6 months ago. That's not going to happen. You can get some starter accounts like Cap One for business, Spark for business is one that I have some people who are kind of new in business or whatnot. There's secured cards at your bank you can always do, that all the banks do secured cards. You can put your car in your name. It's just filling out a commercial application at the dealership or bank instead of personal. So you can put your car in your name and that will start building your business credit. The interest rate's a little bit higher on auto loans for commercial, but you can do that as well. So that's one, that's Dun & Bradstreet.
So these ones don't correlate with the other 3 bureaus, or do they?
So no, well, also real quick, in regards to business, sometimes they will pull your personal credit, just so you know, especially if you're a new business. If you've been in business less than 2 years, you're probably going to have to personally guarantee whatever type of financing you get, which a personal guarantee, I mean, they're only going to come after you if you default and they can come after you personally. But a lot of times it doesn't show up on your personal credit.
Okay. So you say, so personal and business, so I purchased a company 2 years ago. So I've had it for 2 years, but I've never actually done these for business credit. So it's basically all on my credit. So on personal credit, I should actually be doing some of these.
Yeah, so if you've been in business 2 years,
Mhm.
that's great. You should open up a couple of lines of credit. If you have good personal credit,
Uh-huh.
so let's say, I'm just gonna use Capital One Spark for Business. You go on there, apply in your business name, they will pull your social. And if your personal credit is good, even if you don't have any business credit, they'll give you a business line of credit. So if you're trying to get business lending, you need 680 plus personal credit scores to be able to qualify for business lending if they're gonna pull your personal credit score to help qualify you. Now, if your scores are lower than that, then your options might be more limited, but you could still build business credit even with lower personal credit scores. You just have to go do the certain options that help you build credit with lower scores.
Okay, so let me kind of recap. I'm just trying to think of this. So like my real estate business had my LLC. I've never done this Dun and Bradstreet thing. I should go out and go to the dnb.com.
It will search your business. If you go there, it will
Yeah.
ask for you to put your business name,
Okay.
and it will say, is this you?
Uh-huh.
And if one of them is, then you could say yes, and then it will show you what your DUNS is. You might have one. Sometimes people have one and they didn't
Okay.
even know. But if not, it will say, then move forward, and then it will just ask you a few questions.
Okay.
And then after that, you submit, and if you follow up in a week and look up your business name, you'll see your DUNS number on there, and they'll mail you your DUNS number.
Okay, and then, because I just had my business account, my Chase and the business checking, and have, my business credit card, but I only have one. But you're saying I need probably two.
I would open up a couple more, but if you do have one, so let's say you do have something in your business name for 5 years,
Yeah,
even
yeah,
if it's
I do.
just one.
Mhm.
Once you get your DUNS number,
Mhm.
within 30 days, you'll show a PAYDEX score because your bank is reporting already, you just don't have the DUNS number.
Okay.
So you can have lines of credit already and you have no score until you get the DUNS, but then it will give you a score quickly. So-
Okay. I'm curious on that.
That was DNB.
DNB.
Thank you.
So PayNet scores are what a lot of the credit unions and smaller banks and stuff will use. Like I'm like a broker for business finance. So some of the institutions that I send people to for business lending, they'll pull a PayNet score. So PayNet goes from 500 to 800, but it is still based on the same thing, early payments. So as long as you have lines of credit in your business name and you pay them early, your PayNet score should be very high as well. So it's called a PayNet Master Score. It's just another version of like the Dun & Bradstreet, but Dun & Bradstreet is larger, on a larger scale. PayNet is more on a smaller scale, and that's where the vendors and stuff are going to report, is usually to PayNet. So most of the places report to PayNet. And we've actually just started disputing business credit and stuff, so it's pretty interesting.
So should we do DMB and PayNet both?
PayNet is automatic. So you don't have to go get a number or anything for them. You just need some business lines of credit and those banks that report to PayNet, if that's who they report to. Sometimes you don't know which bank reports to who. So PayNet is one of the main ones that most of the banks are going to report to. And then the larger banks and credit cards, Amex, all of them are going to probably report to all of them, to be honest with you. But they're the ones who report to DUNS.
Can I ask you about, as far as a business getting credit cards? So my husband was building, he got a credit card that it gave you like airline miles at the same time. So every time you pay, you get all these miles in addition to. Is there a negative to doing that?
No,
Okay.
no, those are great. And once you've had like your PayDex score and stuff for at least 2 years, you can get Amex, Home Depot, Lowe's with no personal guarantee. So if you've had your business long-term, I mean, every place that gives personal credit gives business credit. Even Nordstrom. Don't ask how I know that. Okay? So there are Experian and Equifax and Telescores. They kind of do a little bit of business credit score reporting, but not a lot of banks report to them. So it's not, they're the 0 to 100 as well, just like PayDex. So this is just another option that some smaller banks use, but they're still pretty much all the same. However, on this Experian and Equifax and Telescore, they do have, if you have utilization that's high, because these are the bureaus, so theirs isn't just based on, your on-time payments. They have a couple other options, but there really are not a lot of banks that pull for Experian, Equifax, and Telescores. But I just like people to know that these other things are out there, because a lot of us don't know. Oh, that is the last one, Experian, Equifax, and Telescores. So, but the most important ones, PayNet, Dun & Bradstreet. Have a couple of lines of credit, pay them early, and you're fine. And then later, if you need anything, then you have your stuff already set up. And then when it comes to your business lending, okay, the things that you need for business lending is going to be, you cannot have a bankruptcy within the last 4 to 5 years. It is almost impossible to get commercial lending if you've had a bankruptcy. It is still possible to get some lines of credit and to open up some, and to maybe get some equipment lines of credit. And equipment can be for, if you want to open up an office space, let's say you're going to open up an office, desks, equipment, printers, furniture can all go under equipment lending. And I have quite a few lenders like that that are pretty amazing. But if you guys want some larger lines of credit or anything like that, you have to have your financials in order. So even if you write everything off or even take a loss, that's okay. Do you have your P&Ls, your profit and loss, your balance sheets and everything? You can't go get commercial lending with none of that stuff set up and being a hot mess. You have to have your stuff, you know, set up. If you have those things, your approval is going to be so much easier. If anybody needs any help or has questions for business credit, I do have a business credit ebook that I sell for about $15. Very inexpensive, kind of goes over stuff I went over today and some options for business lending. If you would like those, you can let me know, shoot me an email, and I'd be more than happy to help you. So just like I said, you don't necessarily need to accumulate debt in order to establish business credit. Even if your personal credit isn't ideal, you can still build some lines of credit in your business. Sometimes I have people have been in a personal bankruptcy, like a Chapter 13, but they have a business still, and they want to try to build their business lines of credit, and you can start, there's some starter accounts. So there's, like, if your personal credit isn't the best and you still want to try to build some, you can try to get, oh my gosh, Granger. So Granger.com. Granger's like, they approve everyone. And they sell like supplies, like cleaning supplies, all types of stuff for all types of businesses, large businesses, small businesses. But that is one that I have people who might be struggling with credit and building some business lines of credit is Granger.com. And another secret word, even though we're about at the end, so we'll just do 2 secret words today, which is PayNet. I'm ending earlier on my longer presentation than I have. So did anybody have any questions about anything that I just went over?
Okay, this kind of goes into the inquiry question. Like, I started getting, like, on my Gap credit card, like, hey, we can tell you your credit score. Like, click on here if you just want to see your credit score this month. And I didn't want to because I'm like, is that going to be an inquiry and count against me? So what are those, and is it a FICO score they're really showing me, or are they showing me one of those Vantage scores? Like, this is Gap.
So Gap does have a bank that they use, and I can't think of who their bank is. No. There's a few banks that do department stores.
Maybe Barclays.
Oh, okay, so it's a soft pull. They will do soft pulls that won't affect your credit, but that is like a bank finance score that they're pulling. So if you say, yes, I want to see my score, it's going to be a lender score.
Okay, and so then I need to watch how many times I do that a year?
No, the soft pulls aren't a big deal.
Oh, okay.
It's the hard pull where you're like filling out an application and they're pulling your credit for it.
Okay.
But if your bank's just giving you an update on your credit score, it's all soft pulls. Just like they'll do soft pulls throughout the history of your account to see if you still meet their score requirement and if it's been active. So
don't worry about them.
Yeah, don't worry about that. Yeah, you can click and see. I like to see how close they are to the consumer report. So if I ever do that, then I go look at my Credit Karma or my Credit Identity IQ and then see how far off they are. So
okay, so then those are pretty legit scores. Okay, and then my business credit card, I added my son as an employee, even though he's not doing anything. But just so he's got a credit card, he's got one of. I have my business credit card, and then my son has one in his name. So is that helping him build his credit? It's my business account.
Usually business lines of credit do not show on your credit report.
Okay, so that's
like I have a Cypress business line of credit that shows on my personal credit as a business line, and then sometimes I see Amex show on people's credit as a business credit card. But if you don't see it on yours, then it's not going to show on his.
Okay. All right.
anyways, well, thank you guys for coming to the class today. I appreciate it, and I'm sorry that we ended early. I just can't even believe that. But if you guys have any questions, you can contact us. For credit repair, we have a 90-day program that's amazing. We have a 30 to 45-day program. Credit repair shouldn't take long unless they have a lot of charged off bank debt. If people have a lot of recent late payments or charged off bank debt that they cannot settle, it will take longer than 90 days to fix credit. But if they, just have a couple lates, lacking credits and collections, a lot of times it only takes a couple months to fix credit. We do a lot of education, which is key. We do all kinds of stuff. We do so much more than any other credit repair company out there. All those other reports I was telling you about are included. We're aggressive. All of our clients are trying to buy houses pretty much. All of my business is referred from the real estate industry and banking. And so our goal is to help your clients quickly. And we're very friendly. We treat your clients like family. We speak Spanish. Anything that you guys need, free consultations to let your client know how long it will be. And we want you to retain your clients because my system is pretty awesome. It attaches you to your client. You get updates if they got started. You could see everything we have them doing. We have a whole program. If we say they could be ready within 90 days and they follow our advice and what we needed them to do, they will be ready. If they don't follow it, it will affect the outcome. So they have to do what we advise them to do.
My neighbor.
Hey, Shaunna.
Yeah.
People online need 2 more words, please.
Oh, I said I was only going to do 2 secret words today, if that's okay.
Okay. Yep, that's totally fine.
Perfect. Thank you. Sorry about that. I forgot to do them at the beginning of the class.
Totally fine.
How much does it cost?
My 90-day program's $4.99. They can split that into a couple payments. If someone might be quick, like sometimes people just have a couple things they need updated, or if we think that these 2 collections will come off quickly, or they're in violation, because we have attorneys that fight our violations. If someone has a FCRA violation and we can't get it removed on the first round of disputes, then we send them to our attorneys and they get our attorneys for free. And they get paid $1,000 once our attorneys win that FCRA case. It's pretty awesome. So my 30 to 45-day program is $229, and then I have an enrollment option for those people who will take longer than 90 days. And that's a setup fee and a monthly fee. But we also have trade line options if people have no score and they just need to piggyback on a card. We have those. We do all kinds of stuff. So if you ever need anything, please feel free to use this as a resource.
So if we have a client who's going through a divorce, what are the things that they're going to want to watch for, for their credit to try to make it so it doesn't affect them?
Well, one thing when people go through a divorce, they think that the divorce decree overrides stuff for their credit, and it does not. So if they're joint on the house, joint on the cars, etc., and then one of the spouse gets the house and the car and the other one's supposed to pay that, and that one does not pay it, it will affect both of them, because once you're on the loan, you're on the loan. There's no way to remove you just because the judge said they're not supposed to, they cannot do that. The loan would have to be refinanced out of their name. So, and we can't make creditors remove lates because of a divorce decree. If you're on it, you're joint, it doesn't matter what the judge says. So remember that, to make sure that you're staying on top of that. Or if someone needs to refinance something or do something, that they do it real quick instead of waiting and then, now they're missing their mortgage payment or who knows what happened after that. So if someone's going through a divorce, I would definitely have them watch those lines of credit that are joint and try to resolve whatever they need to resolve and get those things fixed quickly so that they're not having to do it later on. And if they need to open up accounts in their name, because sometimes the wife has no lines of credit and the husband had everything and they don't know what to do to get back on track, or vice versa, we can help them with that also. So is there any other questions? Hopefully you guys found value in the class today. And if you ever need anything, please feel free to reach out. And then we've got a claimed home warranty here today.
I was supposed to be here, I guess, earlier, but here I am. I made it. I brought you lunch, well, the ones that are here. So I'm Sandra. I'm with Acclaimed Home Warranty. We are a local company. For those that don't know me, we've been in business for over 11 years. I've been with the company over 7, and we're just based out of Murray and down in Salt Lake. So we service the whole state. We also go into Las Vegas, and we go to Boise, Idaho, and Texas, and Arizona.
But we are locally
You're
here.
from Texas?
Yeah.
In Houston?
Yes.
I'm in Houston.
You are in Houston?
Yes, I'm a
Well,
realtor in Houston, girl.
Oh, there you go. Okay. Yeah, so we service Texas. I think it's Houston, Austin. Oh gosh, such a big state.
Right.
But it's the bigger cities. So,
Yeah.
but yeah. So with our plans, we have a few plans to choose from. There's a little card there. We have our ultimate plan, 600 ultimate plan, up to 6,000 square feet. All of our plans are up to 6,000 square feet. In that ultimate plan, we actually give a free rekey service. It's included, so they don't have to pay the service fee. Our service fees are $60. And also too, this month, if you order in April, you get an actual AC tune-up for free as well. So they don't have to pay the service fee for that. So always the free rekey, but we're always doing monthly specials. So if you ever have, if you do one in May, it may be like $50 off the top plan. So we're always doing specials. So you can always reach out to me to find out what that special is, or we send out emails and I try to get out to see you all. In the ultimate plan, I always just like to talk about the ultimate plan. It just covers more. I mean, we do have our other plans, and some people like to just, get the lowest one because that's all the money they have for it. Or there's sometimes I get $4,200. So we do buyer credits. So if the lenders have more money, we actually give that credit to the buyer. So let's say they had $1,500. They could get a 3-year warranty. They can put it on credit, so they could use it as credit. We actually do a $50 discounted service fees, so you can actually just pay for service fees up ahead. So when they call in, they're already paid for. So there's options, and we also do additional coverages too that you'll see on that card. And also for those that are online, this is you can go to claimedhw.com to our brochures, and you can see the coverages that what we have to offer. You probably can't really see that, but claimedhw.com is where you can actually get the brochure. You can it's a PDF online. One other thing that we do on our ultimate plan is we're unlimited on our HVAC, and what that means is we actually cover more than one furnace, one AC. We actually cover more, so we don't have a cap. You'll know that home warranties will have caps on everything: plumbing, electrical, appliances. So we don't actually have a cap.
They are.
Huh?
What about the age of them?
The age, as long as they're still in working condition. Yep. I know there's I'm getting a lot of those calls. Like, it's older, it's still working. If it's still working when they move in, it's covered. So we don't do by age. We also do the incapability of the AC, the old Freon that's out there. Anything older than 2010. So that's the old Freon, which is the R22. They no longer make it. It's illegal. Some people still have it that can add it, but it's illegal. But doing those change outs, we help cover that change out, because the AC, all the Freon goes into the furnace, which is up on top of the furnace, which is your coil. So all that change out is actually included and covered in the warranty. So that's good to know on those. We also do the consumer and rentals. So if you have a rental, we can actually put home warranties on them. And we do listing coverage as well. Listing coverage is based on the standard plan. It's no cost up front. Nothing's for free except for the rekey, right? But so on listing coverage, there is more information in the brochure that will indicate it's on a standard plan. You put a listing coverage on it when you list it. And then once a buyer comes in, we like to have you convert it over. Let's say that you don't use the listing coverage, and the buyers will come in, they have their own home warranty, and if they don't use it, we just close it out. Let's say they do use it, it would be a $60 service fee, and if they don't convert it, we just ask the sellers to pay for the repair that's done. So that's happened before. Usually the limits are different in regards to the buyers. So sellers coverage is actually lower because it's no cost to them. So is there any questions? Okay, well, I'm your go-to gal. If you need anything from that, and then also too is my company that I have is Husky Heating and Air. So if you want to give these out to you and to your clients or whatnot, so Husky Heating and Air, like I said, we've been in business for over 2 years. So it's always nice to have a go-to on a and we're reasonable. We're not like the big guys. Don't ever call it big guys. All right, thank you. I brought you some lunch.
Oh yeah, lunch.
Thank you.
Yeah, you can exit out.
Thanks, everyone.
Thank you.
Don't forget, fix your credit with Bolt Credit.
I won't forget.